All right, let's try it again. Let's see if we have any sound this time around. Should be good to go now. All right. Okay. All right, gang. Okay, so let's get back to it. I'll have to remind everyone the show doesn't start till a few minutes into it. All right, so thank you so much. Good to go. All right. So let's go ahead and take a look at the calendar. We have 3 calendars to take a look at for this week. And as we go into this week, I'll always start at the Forex Factory calendar. It's the one that's probably the easiest to navigate. And one of the things that we do in this week in the market is I outline those important, those high impact hot zones that I'm going to be focused on. And if you're ever at a loss for whether or not a particular release could, in fact, be what I call a hot zone, right? If you're wondering what would qualify as a hot zone, just take a look at the impact column at Forex Factory. And this is where I got the nickname hot zone from. This is where I started calling different releases, whether that be data, whether that be FOMC members or earnings. This is where I started calling them hot zones. And you can see it's a red icon, and that's just where that came from. So Empire State, 8:30 a.m. tomorrow, right? So I've got to keep an eye on that one. Moving through Monday, NAHB Housing Index. See how that one's yellow? Yes, it will likely move the market. Although if you've been keeping up with this week in the market, you know I have a particular eye right now on ITB home construction and XHB home builders definitely on the radar. Now there's a sneaky little hot zone that's coming in here. ECB President Lagarde. If you're looking at the US dollar, if you have been looking at the uptrend on the euro, this is going to be a particularly important event. Now, last week, for those of you that may have not caught it, there was an ECB member who made some very hawkish comments. What is hawkish, by the way? Hawkish simply means favoring higher rates. And that sent the euro, that's the 6E futures, even higher. Now, when the 6E moves up, the US dollar moves down, and that's how simple it is, right? Okay, so we've got that. And those two are just Monday alone. If you take a look at the entire week and just kind of scroll on through, housing starts on Tuesday. We have 2 FOMC Bowman events, 2 of them. And Michelle Bowman speaking, I think, Tuesday and Friday. So heads up for that. I think she's the only Fed speaker on the calendar this week. Moving into Thursday's unemployment claims, consumer confidence numbers, existing home sale. If we've got Lagarde early in the week, keep an eye on data out of Europe. It'll just be a little bit more prickly. Normally, I don't really care much about data out of Europe, but when she kicks the week off and she's kind of aligned the overall markets as to what to expect from the European Central Bank and the euro, it can make some of the data that comes out of Europe this week a little bit more well-watched. Existing home sales on Thursday. And then we go into flash manufacturing, flash services PMI on Friday. So all in all, not a terribly volatile week, right, when it comes to economic data. This is where it's going to get interesting. So we're going to head on over to Estimize. And I'm going to log in here. Just bear with me. Estimize is a free site. You don't have to be a paying member, although there are some very cool services that they have, but it's my preferred way of tracking earnings. So once you've logged in, and I use my StockTwits account to log in. I think you log in via, let's see, you can set up an account with, if you haven't done it ever, you can set up an account, I think, with Twitter, StockTwits, etc. So once you've done that, what I'll typically do is I'll go through all the different equities. I'll do a search for, say, Apple and what have you. And I don't know why it's not working right now. Probably because it's a live show, and that's exactly what would be perfect. So when we can follow, these are all names that I've said, hey, I want to follow these particular earnings. There's a lot of earnings, gang, most of which mean absolutely nothing to the market. How do we know it's going to mean something to the market? Weighting. What is their weight in the indices? What is their weight in the high concentration weighted sectors? And you'll see I've got that all listed here. Now, as we go into this week, Tuesday, Bank of America, Goldman. So we get the second half of the financials earnings. We start getting into more healthcare. Remember, UNH released last week. Here comes J&J, the second most heavy weighted stock in XLV. Now, remember, XLV has been seeing flows. XLV has been getting the love here in Q2 as we're seeing that rotation into what had been a very laggy part of weighting in terms of sector weighting in the markets. LMT, Netflix. So take a look. We're getting the remainder of the financials. Here comes Tesla. We have a lot of interesting earnings. Now, the next big sort of release of earnings that are going to be the ones we're going to watch don't come until towards the end of this month. We get Google and Microsoft. And then as if the first week of May, there's Meta, as if the first week of May won't be crazy enough with the Federal Reserve on May 3, on May 4, we have Apple. So between now and May 4, between earnings, right up until Apple on May 4 and the FOMC on May 3, this is probably the calendar that's going to be a lot more important, except for, say, non-farm payroll and any inflation or GDP data we get as we go through earnings season. All right, gang. So calendars are a big deal right now, especially as we're in this very, very early part of earnings. All right, and that just brings us to the charts and the question, as always. All right, gang. So let's jump on over to the charts. There we go. And let's take some questions. And yeah, we had some sound issues. Thanks for your patience. And we're all set now. Excellent. All right. Let's see. First up, PP Family asked, good morning from the Far East. Good morning. Now that CPI is out, are we expecting any more rate hikes? Is another 25 basis points already discounted or market expects to correct? I don't know what you mean by market expects to correct. However, now the CPI is out and a lot of the other data, right? What are we expecting? Sure, let's jump on over to the CME FedWatch tool. And yes, the quarter point hike for May 3 is, as we would call it, fully discounted, right? So if you're wondering, is this fully expected? Once we clear 80%, which we have, this is actually 98 and change. I mean, this is yes, gang. No one should be in any way surprised when we get the hike. So absolutely, it is fully discounted. As soon as we get above 80, that's where I'd say, look, this is easily what is the most expected result. We're at 4 3/4 to 5%. Here's your 5 to 5 1/4, and this is the quarter point hike that has absolutely been discounted, absolutely expected. But that's not really what's going to be important. It's going to be whether or not in May or in June, the Federal Reserve starts to pivot in their messaging. So you'll also notice that in June, this is now a hold, right? So if we're going to see some sort of an overall pivot, right? If we're saying, hey, what can we expect? What is the thing that we're going to sit here and say, this is what we're expecting? The Fed pivot is likely from a messaging standpoint going to come in June. When I say messaging, just in words alone. And then July, it's another hold, right? For the most part, you can see this is 31%, maybe a cut in July. It's September. It's September where we're expecting the quarter point cut to come. Now, it's still not up at this fully discounted, right? That 80%. It's not at that fully discounted level, but it's certainly leading the charge, and that's going to be September. And that's what the Fed Fund futures are saying is most likely going to happen. This is important for two reasons. One, this is what we collectively are expecting. Number two, this is what we collectively are telling the Federal Reserve we're expecting. And believe me, gang, they know what these probabilities look like. They know what we are communicating via this futures contract to them. So thank you for the question, PP family. So yes, quarter point hike in May, hold in June, hold in July, cut in September. That's the most likely scenario. Of course, every bit of significant data, whether that be inflation data, jobs data, etc., that's going to change our expectations, either minimizing or really emphasizing what we're expecting. But yes, are we expecting rate cuts despite what Jerome Powell said? Are we expecting rate cuts this year? We absolutely are. Yes. All right. And if this kind of macro discussion is interesting to you, you can check out This Week in the Market. We've rebooted it. This is now the fourth issue, I believe, of the newsletter. And thank you, everyone, for the feedback. It's been fantastic. Lots of charts, lots of rate of change data, analysis of macroeconomics. We did a deep dive on the VIX in this issue, did a deep dive at inflation and gold in this issue. And I think it's going to be one that will help a lot of traders out there wondering, what's the relationship between gold? What's gold actually saying about the broader look at inflation? What is the VIX saying right now? And if you watched Friday's, I believe it was Friday's free video, one of the things I think I called it lazy VIX. Right now, the VIX is about as complacent as it has looked in a while. It's looking pretty lazy considering what's coming up in the next 2 weeks in terms of data, earnings, Apple, Federal Reserve, and the VIX is sitting down just below, I believe it's 20. Here we go. Let's go take a look at that. Now that I'm talking about, let's just jump on over there. So I like to look at the VX futures, and then we can look at the VIX. Now, why do I like to look at the VX futures? Remember, gang, if you like volume tools, they will not work on the VIX index, just like volume tools will not work on the SPX, right? If you want to incorporate volume, which matters a lot, gang, if you want to incorporate volume into your VIX analysis or your S&P analysis, use the futures contract, but then you can take that information and it will translate over to the SPX or the VIX, right? So really interesting place we are at right now in the VX. And this is why I call it complacent. You can see where we are. It's a neutral environment right down to the bottom of the range. And if you're wondering, hey, Rog, why were we knocking on the door at 28? And by the way, 28 would basically translate to about that 30 area on the VIX, right? So they're going to look the same. It's just the prices are going to be a little different, right? But what was this? This was the regional bank crisis, right? And look how quickly we move lower. One of the things that I'm going to do in this upcoming issue of This Week in the Market is a question I've been getting a lot of, which is Rog. Well, first of all, there's our complacent VIX starting to give us a potential buy signal. But one of the things I'm going to dive into is, have we finally seen the sigh of relief coming after the regional bank crisis? Are we really out of the woods? Is it really something we can kind of move on from? And I do believe, yes, the data from the Federal Reserve itself is panning that out. And that's going to be a big part of This Week in the Market, our upcoming issue. That'll be what? The April 21 issue. All right. So next up is, let's see, PP Family's asking, is it possible for Simpler Trading to send us a weekly watch list of tickers, which are tradable and investable stocks for the week on a support and resistance? PP Family, that's what we do in our room. So depending on what you are looking at in terms of what type of trading you're looking for. Not everyone here at Simpler trades the same time frames, the same style. Our watch list will vary. There is no Simpler wide watch list. A lot of us look at similar symbols, but we don't look at them the same way, the same time frame. So there's no company-wide list. And if you are interested in what individual traders are trading, that's what our rooms are for. All right. Okay, next up. All right, Kalwan, what's the best way to start option trading? Please recommend a book. What's the best way to start option trading? Well, I mean, if you want to do the basics, start off with understanding what puts and calls and derivatives are generally. I think you can do that online for free, quite frankly. I don't think you need a book for that, Kalwan. Just do a couple basic searches on puts and calls. And I don't know where you are in terms of where you want to learn how to trade options, right? Because once you decide you want to be trading options and you understand volatility and intrinsic price and some of the lingo around it, After that, I think the most important thing is to find a strategy, because here's the thing with options trading, unlike really any other kind of trading, there are probably 7.2 million, right? Only slightly exaggerating, different strategies. At the end of the day, Kalwan, here's all you really need to know about options trading. You can buy calls, buy puts, sell calls, sell puts. Anything that takes you further away from those four basic positions is just confusing something for confusing sake. As you evolve as an option trader, if you decide to go beyond just buying calls and buying puts, which is all I do, that's my preferred way of trading options. What you'll see is every option strategy is some combination of buying puts and calls, or buying puts, selling calls, selling puts, buying calls, whatever it is. But all you can do at the end of the day is buy puts, buy calls, sell puts, sell calls. And the combination of those four things makes for the gazillion option strategies that are out there. And that's really it. I don't really have a book that I'm particularly fond of, because most of them overcomplicate, get into ridiculous amounts of Greeks. Here's how you can think about options trading. And this is how I teach it in the Sector Secrets Mastery. This is the way I teach options trading. I have no business trading. Sorry, I got hair in my face. I've got no business trading an option unless I have a really clear read on what the underlying is doing. So for example, let's just take a look at Apple for a moment. If I don't know the trend on Apple, the support and resistance levels on Apple, the path of least resistance, etc. in Apple, I've got no business trading puts, calls, or otherwise, right? So this is where a lot of options traders forget that if the underlying stock or ETF or futures contract isn't clear, we should not trade a derivative, which is what an option is, of that. And so I find options trading is so often overcomplicated, because traders who trade options start to think about a lot of those fancy strategies and not about, do I have a good read on Apple? Is it bullish? Is it bearish? Is it in a trend? Is it chop? Is it overbought? Is it oversold? Is it retracing? Is it reverting to the mean, etc.? All those very common things that many of you probably know that we discuss here at Simpler. Once you get that read, now you know if you want to sell a call or buy a put, or buy a call or sell a put. Now you know what to do once you have a read on the underlying. That is literally what I would tell anyone who wants to start focusing on options to start with, and then forget selling options and credit and things like that. Get really good at buying calls and buying puts. Get really good at that very basic long call, long put approach, and then move on to collecting credit or multi-leg strategies. Okay, so I hope that makes sense. That's the way I would start. All right. The next thing we're going to take a look at is, what do I see on NVDA? Sure. So we have a daily uptrend on NVDA, Edgar. Yeah, so what I would highly recommend is a long only strategy. So kind of going back to the earlier question about options, this would be long calls only, right? Now, some folks might say, okay, Rag, I'm kind of past the long call, long put part of my options evolution. What else can I do? You could sell put premium. I would not sell call premium. So you could sell put premium when the market sells off, because the expectation is we're going to continue to move higher. So either get long a call, buy the stock, or sell puts, right? And all those need specific timing and pricing to be valid. So that's the setup part of any trade. But as a general rule, I would say with NVDA, this is buy the dip, my friend. So when we have this kind of green, this is an uptrend. So this is the market trend. We could focus on the daily price movement range. We could focus on Darvis support. That's our Darvis 2.0. So really what you're looking for is what kind of support can you buy into? And that's really the plan. Where is the support? And how do I get long calls? How do I get long the stock? How do I position myself in such a way that I could take advantage of movement higher, right? And you might say, well, Rag, how does selling a put take advantage of movement higher? Remember, if you sold a put on some bearish momentum and you've collected some premium, and then the market does what we anticipate it's going to do, it keep moving higher, realize this premium is going to continue to lose value, and that's how you make money, right? That's another way of options trading. All right. Let's see here. For options basic, yeah, the Chicago Board of, yes, they do have a lot of, yeah, there's a lot of, if you're looking for basic options approach, I don't mean strategy and community and things like that, but if you're looking for a basic options approach, gang, yeah, I would definitely start with the myriad of resources from the exchanges themselves. Even your broker is going to have some very, very good basics, right? In other words, it's as if we want to learn how to run a marathon, but we first need to figure out what shoes do we buy and how to tie them, right? Um, and I think a lot of that kind of very basic information, how to tie your shoes, is really great for online. And then once you've got the basics and you're ready to start trading and you're ready for strategy and community and some guidance, that's what our rooms are definitely for. But yeah, the CBOE has a lot of great information. Agreed. Yeah, great point, Jim. I appreciate that. All right. Do I look at the fear greed index? We are overdue for a major reversion. I never think we're overdue for anything, my friend. I appreciate it. Do I look at it? I don't. And look, we have to look at the pieces individually, right? We have to look at sectors individually. Healthcare is acting very different than communications. Communications are acting differently than industrials. Industrials are acting differently than tech. So I think, first of all, I don't want to talk about the market in a broad sense where we're going to have a broad-based risk aversion event where all the sectors and all the indices, right? There's always money flowing somewhere. So if I'm talking about indices and equities, sure, we could pull back. But no, I don't use a fear greed index. No. But my question is always, let's say we do pull back, right? And I don't disagree. I don't know about major, but again, who knows? I'm not here to say I know where the markets are going to be. My analysis is never dependent on it. But what I will ask myself is, which trends are up that I can buy into? The S&P is up, so weakness is going to be a dip buying opportunity. The NASDAQ is up, so weakness is going to be a dip buying opportunity. XLK is up. So again, so you can see there's a number of places where the trend is up. We looked at NVIDIA earlier. Those are going to be dip buying opportunities. But what about things like, well, XLF, financials? Financials are not in an uptrend, right? So if we get weakness there, different strategy, different underlying market trends. So yeah, in a word, I do not use, I actually am not familiar with the I've heard of it, but I don't know what the calculation is. And so, yeah, therefore I do not use it. All right. Edgar, you're currently long NVIDIA. Love it. Yeah. Go with the flow, right? If that's where the river, if that's where price is flowing, absolutely. That's what we want to do. Right. And then remember, time frame matters. Right? Time frame matters. And I think depending on what different traders might be looking at, and I think a lot of times when people are looking at different opinion about the same symbol, differing opinions come from differences in time horizon, meaning how long do you expect to be in the trade? And so, for example, if I wanted to be bearish in NVIDIA, there are opportunities to be bearish in NVIDIA, no doubt. But how long would I be bearish for? Probably very few days, maybe 1 to 2, maybe 3 days. But if I were looking long, that would be based on the daily. So I have a longer time horizon. I have a longer expectation for follow through, and I'm expecting to be in a trade like this for, maybe 10 days or more. Right? So time frame and time horizon are going to be usually where there's a difference in positions. And I think that's where, when traders are wondering, hey, I'm hearing this person's bearish, this person's bullish. To me, the first thing I try to do is look at their chart, and hopefully they're not using some teeny tiny font so I can't see it. A lot of people do that. I don't know why. But you want to look at the time frame. So if they're breaking down a 5-minute chart, they're probably not going to be in that symbol, but for maybe the day. If they're looking at a 30-minute or 1-hour chart, they're probably not looking for follow through for more than a couple of days, handful of days. If they're looking at a daily or weekly, oh gosh, now we're talking days, if not weeks, right? And each one of those time frames has their own sort of volatility expectations. Each one of those time frames has their individual market structure. And so I think a lot of times when we hear about analysis, the first thing we should ask is, oh, not what that indicator is, right? The secret squiggle is not the answer. The first thing should be, what time frame and what time horizon, right, are you focused on? And when you get to that level of understanding where the analysis is coming from, now you can put yourself in their shoes, put yourself in that chart and go, okay, this is where the expectations are. So I hope that helps. All right, gang, as always, thanks so much for being here. I'll see you tomorrow morning for Charts and Coffee, 9 a.m. I will talk with you all then. All right, gang, enjoy the rest of your weekend. Be good to each other. 9 a.m. right here at the Simple Trading YouTube channel or at my own YouTube channel at Raghee Horner.